The Fed tomorrow is the key, and it's the only thing that we've heard across all journalists, news desks, market commentary desks, etc., as we move towards that meeting. How important is the size of this quantitative easing, and what are the consequences if we see it disappointing on the downside?
I think the risk lies in the fact that to a large degree the market is arguably pricing in anything between $500 billion and $1 billion. If you look at the consensus,
Bloomberg consensus at $500 billion, but they're not saying whether this is going to be piecemeal or it's going to be all in one shot.
Yeah, exactly. So, you know, it's a matter of fact whether it's going to be the shock and all that they've used previously, or if they're going to calibrate the response in relation to the economic data that comes out. You know, whether it works, I think, you know, our opinion is that it'll have a short-term positive impact on markets, because it's going to improve liquidity for other players in the market, and you know, we're likely to see that cash flow back into the markets, particularly into commodities and probably developing economies.
JD Group up 4% at one stage today, saying that their headline earnings per share will increase sevenfold, 700% for the full year. There is obviously a once-off item in the prior set of results.
Yeah, on the face of it, quite a spectacular result, but as you said, the base very low. I think that result coming ahead of expectations. And you know, one of the reasons why we like the business is if you look in terms of its business cycle, the margins are the implied margins from the trading update are probably sitting at about 6%. This business has averaged about 12% historically. So on a balance of probability, there's more likelihood that margins will improve from this level given particularly the measures that management have implemented over the last 12 to 18 months in terms of restructuring the business.
Truworths, as I said just a short while ago, close to the top of the top 40, up 2%. Any news flow particular to Truworths? We have seen the retailers trending stronger of late. Pick n Pay has been accumulating ground ever since their results out recently. First half results with headline earnings per share down 12%, but the stock has lagged the rest of the sector and now appears to be playing catch up. Your thoughts on these retailers?
Yeah, I think broadly speaking, we've seen a very strong run in the retailers over the last few weeks on a day-to-day basis. You know, Mr. Price, Truworths, Fashini keep on hitting new 12-month highs and new all-time highs. And I think that's you know, largely the influence of foreign buyers coming into the market and you know, doing a relative valuation on these businesses and believing that they look cheap.
RMBH, last night I was speaking to a banking analyst from AfriFocus Securities, Johan Scholz, and he was saying that RMBH is likely in play. Certainly the share price movement that we've seen of late, the fact that it's outperforming FirstRand, indicates that there's some corporate action on the horizon. Do you agree?
Yeah, they could potentially be setting themselves up. We've also got the unbundling of Momentum, so that's a precursor to take the you know, that insurance business out of it, to leave you know, FirstRand and RMH as a direct banking model. You know, so certainly you know, nothing's beyond the realms of possibility, and it was always you know, first in line, I would guess, because of the shareholding structure there, and you know, there were call it friendly hands that were willing to release their shares in terms of the three founding shareholders.
You're talking there about GT Ferreira, Laurie Dippenaar and Paul Harris.
Yes.
It would be a big kicker for anybody who wants to take out that banking asset. Looking again at, and just today, actually pointing out that RMBH is lower. We're down 1 1/3% on that stock. Anything offering value in the local market? It's difficult at these levels. We're above 30,000 points.
Yeah, I think you know, largely in us, across the market, and ourselves included, we're sitting on our hands at the moment. You know, we've placed our bets, as it were. We've got our equity exposure, and particularly in the face of tomorrow's announcement, we've seen volume and liquidity dry up today in the JSE. So I don't think there's a lot of new money coming into the market in front of that announcement.